More on that later. Let's move on, though, on this and focus on those AI stocks. Amid some warnings from investors, at least, that AI spending is maybe getting out of hand. Ken Griffin saying, for example, to Sarah last week, that right now there are echoes of the dot-com bubble. And David Einhorn saying, quote, the numbers that are being thrown around are so extreme that it's really hard to understand them. I feel like I've said something similar to that as well. Joining us now is Byron Deeter of Bessemer Venture Partners. He holds investments in Anthropic, Perplexity, Canva, and many other companies. All right, I mean, Anthropic alone, I can't even keep track, for example, of both the increase in accretion of value and their private valuation, Byron, not to mention how much money they have to spend. Does any of that scare you?
It turns out that these numbers are pretty big, and yet the revenue side is the difference this time. So I think the anxiety is well-founded as people are trying to figure these cycles out. But I absolutely refute the dot-com analogy. We're looking at a market here where the revenue numbers and the pull-through from consumers and application partners are staggering. And so as we're getting into the hundreds of billions of dollars of enterprise value for these private companies, it's unprecedented, but I don't think irrational.
So you believe it will be there. I mean, we can take OpenAI as an example. ChatGPT, obviously an incredibly successful product. I think they talk about having 700 million at least monthly active users. And the revenue projections are very steep. All that said, though, it's still a very small percentage of people who use it who are actually paying for it. And then we get to the enterprise, and what is the hope there that businesses really will pick it up? I guess you're obviously a believer that all that is going to happen.
Well, I think we're starting to see different phases of this come online. I mean, first off, OpenAI and Anthropic have real revenue growth that we have never seen in the history of software, blowing deep into the billions in pure revenue. Gross margins have started to follow in pretty attractive ways. They're doing it, though, with different approaches. OpenAI and ChatGPT as their lead product is really going after Google's core and trying to disrupt the most valuable business in the history of the internet, which is Google's search monopoly. On the other side, Anthropic certainly has the Claude product, but it's really the API business that's starting to unlock all of these business value drivers and go upstack into the application world. Both of those business models can be incredibly successful, and we're seeing it through their monetization. And so it's early, it's disruptive, it's scary in some ways, but when you're looking at entirely rebooting the software stack and addressing services dollars that historically had never been accessible by tech, I don't think these market size estimates are unfounded.
Trillions of dollars going to be spent here, Byron, to build the data centers that are going to run all these applications. Why do you believe ultimately then, again, that the return will be there in terms of all the invested capital taking place? And to your point, we've talked about how it may, rhyme with some of the concerns around the dot-com bubble. But obviously, these are the largest companies in the world that are spending this money. They have the capacity to do it. Nonetheless, why do you think they're going to get a return for all that capital they're investing?
So if we step back to pure market size, I think the hyperscalers are the closest analog here. We've seen, obviously, the world's first trillion-dollar businesses emerge in that category, as well as those enabling that category, with NVIDIA as the most notable, provider into that arms race. This foundation model race is very similar. This is the brain of the AI revolution that these companies are fighting for, and it will be an oligopoly outcome again. However, this time, it's not just historical software markets, but we're seeing things pulled into them. As we're talking about job displacement and disruption, the services economy is going through this cycle. We've seen it before with many tech innovations and disruptive cycles, but the value chain is going to go deeper and bigger. We talk about adding a zero to all the numbers that we thought of historically in software, and I think that is absolutely the right way to think about it in terms of total addressable market. And so we need to think differently, and we need to look at some of these adjacent categories in GDP to think about truly what can be possible for the outcomes of these businesses.
I think it was Mark Andreessen who poked fun at Anthropic, because the CEO, I think, predicts 10 to 20% unemployment, but at the same time is majorly expanding the global workforce. And then there was a big article about that. So the job question still is out there. How many people do these companies need to hire? How big is this industry going to get?
Yeah, so I'm a tech optimist, and I see this as a transition in the workforce. And it's not unlike the Industrial Revolution or the Renaissance, or at smaller degrees, steel and automobiles and aerospace. We go through these cycles in tech, and there is going to be a realignment. And this one is probably going to be faster and more significant than anything else we've seen in our lifetime. However, If we want to be competitive on the global stage, U.S. businesses need to be efficient. AI is driving efficiency, performance, and outcomes, and will ultimately drive value creation, which will roll through to more jobs being created, higher value jobs, and more interesting jobs. And I think that's exactly to your point. We're seeing that now, as we're seeing expansion in parts of the economy that we hadn't anticipated in some other areas, as these workers will be transitioned into more interesting roles.
You know, Byron, one of the more interesting theories I heard spun out this weekend was that the next generation of GPUs might be so efficient and might actually improve their energy use to where they can maybe operate at room temperature, which would be great and amazing, although all of the leading chips now might be rendered obsolete before they had a chance to make any money.
We are seeing crazy things in the hardware innovation cycles and then the software footprints that follow in terms of driving efficiency. And so there's a lot of disruption still there ahead. Broadcom obviously has been doing a lot in partnership with the hyperscalers here who are producing their own silicon now collectively. Power remains a bottleneck, so it's a key focus area. Cooling is a key input into that. And so anything you can do for chip efficiency and to reduce the data center footprint there will be transformative. People are hitting it from all sides. We're seeing a rebirth in fission. We're seeing fusion, nuclear being funded now again because there's such a shortage of power, and at the same time, the hardware and software layers are coming at it. I expect dramatic innovations in all three sides, and that we're going to see continued leap aheads in terms of price performance and power performance for this industry that will benefit the end consumer as the cost and efficacy of these continue to skyrocket. The costs come down and the efficacy continues to go up on a dollar per output basis.
All right. Byron, very, very optimistic. Always appreciate it. As you can tell, we're always interested in having this conversation. Look forward to having you back soon. Thank you.
Always fun to be with you. Thank you.